Good afternoon. Welcome back. Today is Friday, 2nd day of June, 2023. Thanks so much for joining us. Wherever you are, wherever you are, we're just glad to have you right here, right now. We do 2 live broadcasts every trading day. The first live broadcast is from 9:30 a.m. to 11:30 a.m. Eastern. That's our live training room. But it's reserved for members only and those who are taking their 1-week free trial. If you've never taken your 1-week free trial, you can do so right now by going to mytradingiq.com, and at the very top of the page, there's a button that says 5-day free trial. Doesn't matter what day of the week or weekend or hour of the day that you sign up for the trial, you will get 5 consecutive trading days with complete access to every resource that our lifetime members have access to. The live training room, unlimited one-on-one mentoring. You'll learn our strategy. You'll get to use our indicators, our platform. You'll get the Logic 247 alerts, the concierge trade alerts, everything a trader needs, all under one roof, and there's no credit card required. We invest in you, our time, our energy, our resources, so that you can make a well-informed, intelligent decision with no pressure as to whether or not trading is right for you. Now, when the live training room ends at 11:30 a.m., we take a 30-minute break, and then we come back for the afternoon broadcast. That would be this broadcast at 12 noon Eastern every trading day. There's 2 different ways to join the afternoon broadcast. The best way, go to mytradingiq.com, scroll down to where it says afternoon broadcast. Click the link, complete the 30-second registration form, and you're done. Going forward, every trading day, you'll get an email about an hour before this broadcast starts. And at 12 noon Eastern, all you have to do is click the link in the email, and you'll be automatically logged into our platform. Now, there's going to be days, and when you do it that way, you have access to the question box, so you can ask questions and be a part of the discussion. Of course, there'll be days you're out of the office, away from the desktop, but you still want to join live. We have a solution for that. And there'll be days when you're just busy and can't tune in live. We have a solution for that too. Interestingly enough, the solution is the same. Go to our YouTube channel, youtube.com/CFRN. That's really all you have to remember, because everybody knows youtube.com. Just remember the CFRN part, youtube.com/CFRN. Not only do we broadcast live every trading day on our YouTube channel, but we also archive each and every daily broadcast. Currently, there's over 2,200 daily episodes archived for your educational and viewing pleasure. For those of you that are new to the world of CFRN, it's also a great way to get to know who we really are. Anybody can say and do anything today, but what was their story a week ago, 6 weeks ago, 6 months ago, 2 years ago? Thanks to YouTube, you can find out where we stood each and every day and what we had to say. Now, of course, I don't expect you to listen to every episode, but just scroll back and pick some days at random. And even if you don't listen to the whole broadcast, that's fine. Just be sure to fast forward to the part where you see me doing the recap of the alerts and where you see Michael doing the recap of the live training room. So what will happen today, as every day, 45 minutes into this broadcast, Michael will join us. He'll spend 15 minutes giving us a recap of what happened in the live training room. Then we will trade live on the TradingView platform for 30 minutes. And then I will complete the recap of whatever markets we haven't gotten to up to the point when Michael joins us. So, with that said, let's open with a word of prayer. Now, for the past week, our topic of discussion for our daily devotional has been resetting your mind, getting rid of toxic thoughts. And we all have them. Our scripture today is Matthew chapter 4, verses 1 through 11. And I'll be sharing with you from the Message translation. Next, Jesus was taken into the wild by the Spirit for the test. The devil was ready to give it. Jesus prepared for the test by fasting 40 days and 40 nights. That left him, of course, in a state of extreme hunger, which the devil took advantage of in his first test. Since you are God's son, speak the word that will turn these stones into loaves of bread. Jesus answered by quoting Deuteronomy. It takes more than bread to stay alive. It takes a steady stream of words from God's mouth. For the second test, the devil took him to the holy city. He sat him on top of the temple and said, "Since you are God's son, jump." The devil goaded him by quoting Psalm 91. Yes, the enemy knows scripture. Psalm 91. He has placed you in the care of angels. They will catch you so that you won't so much as stub your toe on a stone. Jesus countered with another citation from Deuteronomy. Don't you dare test the Lord your God. And for the third test, the devil took him to the peak of a huge mountain. He gestured expansively, pointing out all the earth's kingdoms, how glorious they all were. Then he said, "They're yours, lock, stock, and barrel. Just go down on your knees and worship me, and they're yours." Jesus' refusal was curt. "Beat it, Satan." He backed his rebuke with a third quotation from Deuteronomy. Worship the Lord your God and only him. Serve him with absolute single-heartedness. The test was over. The devil left. And in his place, angels. Angels came and took care of Jesus's needs. Again, that was Matthew 4, verses 1 through 11 from the Message translation. And I just want to add that in memory of my grandmother, I've seen her fast 40 days and 40 nights, more than once. She lived to be 96 years old. Now, again, this is the last day of this topic about toxic thoughts. So we're going to talk about how we put it into practice. Here's a quote from Dr. Caroline Leaf. She's probably not a pastor. Somebody was rubbed wrong the other day that because the quote I shared didn't come from a pastor. But anyway, after 21 days of rewriting thought, you have wiped out the toxic thought and replaced it with positive, productive thought. Here's how we change our lives. Now, the scripture we just read in Matthew tells about the devil tempting Jesus when he was in the wilderness for 40 days. During that time, Jesus went without food. The devil knew he was weak, and he tempted Jesus to turn from God. With each attack from the devil, Jesus responded with the word of God. Even though he went without physical sustenance for 40 days, he survived and thrived spiritually. Because Jesus spent time with his Father, he knew the truth. He was prepared for this temptation. We can't live in freedom if we constantly allow our toxic thoughts to monopolize our thinking. The best way to battle them is by applying Scripture, because that will strengthen us in our own battle. We must gear up ahead of time and not try to do this once we're in the battle. Soldiers don't look for their weapons when the bullets are flying. They're prepared ahead of time and at all times. So let's prepare ourselves by putting our minds to the test and choosing to capture toxic thoughts instead of entertaining them. And once we do that, we end that lie that has held us hostage by declaring God's truth. This is how we live free of toxic thoughts. But it is also true that if we will fix our thoughts on Jesus and live our lives to honor him, the need for having to test and capture our thoughts will decrease over time. The author of the Message paraphrase encourages us at the end of Philippians 4:8 to fill our minds with the best, not the worst, the beautiful, not the ugly, things to praise, not things to curse. We must continually be filling our minds with things that bring life. We must look for the good, for when we do, we'll find it. Join me in a word of prayer. Heavenly Father, we come before you today with hearts humbled by the example of your Son, Jesus Christ. We are grateful for the teachings and the life of Jesus, who showed us how to resist temptation and walk in obedience to your will. As we meditate on the words found in Matthew 4, we are reminded of the powerful encounter Jesus had with the enemy in the wilderness. Lord, just as Jesus faced the temptations of the enemy, we too face daily battles against the forces of darkness. We recognize that the enemy seeks to deceive, distract, and lead us astray from the path of righteousness. But we take solace in the fact that Jesus, through his perfect example, has shown us how to overcome temptation and stand firm in our faith. We pray today, God, that you would grant us the same strength, the same resolve that Jesus displayed during his time of testing. Empower us by your Spirit to resist the allure of worldly desires, the deceit of empty promises, and the pride of self-sufficiency. Help us to cling to your word and seek your face above all else. Help us to remember that we are to worship and serve you alone. May our hearts be filled with adoration and reverence for you, our Creator and Redeemer. Guard us against the temptation to seek power, prestige, and earthly riches. Instead, cultivate within us a desire for a humble and servant-like attitude, following the example of Jesus. Lord, we confess that we cannot overcome temptation and walk in obedience by our own strength. We rely completely on your grace and mercy. Fill us today with your Holy Spirit, who empowers us to live holy and righteous lives. Give us the discernment to recognize the schemes of the enemy and the courage to stand firm in our faith. May we find comfort in knowing that Jesus, our high priest, sympathizes with our weaknesses and intercedes on our behalf. Thank you, Jesus, for being our perfect example and for providing the way of escape from temptation. We praise you for your victory over sin and death. We offer this prayer in the name of Jesus Christ, our Lord and Savior, and everybody said, amen. Amen. Happy Friday. I hope it is a happy Friday for you, whoever you are, and wherever you are. Now, if you're tuned in via the YouTube channel, you already know the title of today's episode: The Difference Between Investing and Trading for a Living. We're going to talk about that for a few minutes as soon as I give you the numbers from around the world. We're going to start here in the US with the cash markets, or the indices as they're called. And something really big has happened overnight and today, something we've been waiting on since February 2nd, and I look forward to showing you when we get to the charts. Currently, the Dow is up 579 points, 1 3/4%. The NASDAQ is up 108 points, almost 1%. S&P 500 is up 52 points, 1 1/4%. And the Russell 2000, our man in the street, up 41 points. That's a gain of almost 2.5%. In the commodity basket, crude oil up $1.67, trading 71.77 last. It's a gain of over 2%. Now, you'll remember a couple days ago, crude was trading below our lowest weekly trading zone. But I said then, by the end of the week, by close of business on Friday, we fully expected crude to be at or above that lowest weekly trading zone. So I look forward to showing you that chart as well. Gold, on the other hand, down $21.50, trading 19.74 last. It's a drop of a little over 1%. Silver down 21 cents, trading 23.77 last. That's a drop of almost 1%. In the Asian markets at the close, the Nikkei posted a gain of 376 points, 1 1/4%. Shanghai rose 25 points. The Hang Seng knocked it out of the park, up 733 points. That's just over 4%. And in the European markets at the close, FTSE up 117 points, 1.5%. The DAX up 197 points, 1 1/4%. And the CAC up 133 points, almost 2%. So that gave us a green day in Asia. It was a green day for the UK. And it is a big green Radio Friday here in the US of A. So, what is the difference between investing and trading for a living? Investing and trading are two distinctly different approaches to generating income from the financial markets. While both involve active participation in the market, They differ in terms of time horizons, strategies, and goals. This talk will aim to shed light on the fundamental differences between investing and trading for a living, and hopefully give you a better understanding of these two different approaches which you can do simultaneously. Investing typically involves a longer term perspective and is focused on building wealth over time. Investors aim to generate returns by purchasing assets such as stocks, bonds, real estate, or mutual funds, and holding them for an extended period. Their primary objective is to capitalize on the growth potential of these assets, taking advantage of factors such as dividends, interest payments, or appreciation in value. Investors tend to conduct thorough research and analysis, considering factors like a company's financial health, competitive advantages, and industry trends. They look for undervalued assets with a long-term growth potential and often adopt a buy and hold strategy. Patience and a long-term outlook are key attributes of successful investors. Investors also tend to diversify their portfolios to mitigate risk. By spreading their investments across different asset classes and industries, they aim to reduce the impact of market volatility on their overall returns. Income from investments can supplement their living expenses, but the primary focus is on wealth accumulation and long-term financial security. Now, understand that any stock, no matter how strong and powerful it looks today, can go to zero. Stocks can even drop below zero. You might not have known that, but I've seen it happen to some stocks that I own. Now, trying to pick the right stock, the one that's going to continue to increase in value over time, can be difficult. Now, some people enjoy it. It's kind of a hobby, and there's nothing wrong with that as long as you're aware of the risk that something can happen. And that $400 stock, I remember when Yahoo was trading at 400 and change. And before you knew it, it was trading at $4. There's a solution to that. It's called an index fund. And I know you've heard me talk about this before, and I talked about it yesterday with one of our newest passport holders. He is only 19, but my goodness, this guy is sharp. When I talked to him about dollar cost averaging, he knew what I was talking about. When I talked to that about people my own age, their eyes just kind of, gloss over. And they just nod their head, yeah, okay. But no, he understood. You see, the S&P 500 index, this is just one example. That's 500 large cap companies, and they're all doing good. But occasionally, one of those companies that comprise the S&P 500 will get sick, get weak, miss their earnings, have some other kind of problems. The CEO runs off with all the money, whatever. When that happens, the board at Standard & Poor's will remove that company from the index and replace it with a company that is currently outperforming analyst expectations. So when you have a time horizon, like the young man I was talking with yesterday afternoon, if you just start out by buying one share in the Spider, for instance, which is an S&P 500 ETF, electronically traded fund, and you make a commitment. You know, maybe you can't even buy a whole share right now. Maybe you could only afford $100, but make a commitment that every week you're going to add X amount, or every month, or twice a month, however you get paid. Whether it's $25 or $50 or $100, make a commitment. Now, there are going to be times when the market runs up and times when the market runs down. But over time, the S&P 500 index is always going to go higher. Same with the Dow, same with the Russell, same with the NQ, because these funds are actively managed, which means you don't have to try and pick the winner out of the pack. You're spreading your risk over 500 different companies. And when one of those companies gets weak, they get replaced by a very strong and healthy company. Oh, how I wish someone had given me that knowledge at 19. I don't even know if there was a SPDR ETF when I was 19. But if I had had that knowledge and had just fed that thing through all the ups and downs that the market has seen since I was 19, I'd probably be broadcasting from some boat anchored somewhere off some island in the Bahamas. You dollar cost average. When the market is in a downtrend like we have been, for over a year, then your $25, $50, or $100 a week buys more. And then when prices rise, your money buys less. But then when the market sells off, your money buys more. Now, that works well for someone who has a long time horizon, a long window to their retirement age. If you're already at retirement age or very close, well, you can still, buy shares in something that over time is going to go higher. But you may have to take a more active hands-on approach, which takes us to trading for a living. Trading versus investing involves a shorter-term approach with a focus on capitalizing on short-term price movements in various financial instruments. Traders aim to generate profits by actively buying and selling futures, securities, currencies, commodities, or derivatives within relatively shorter time frames, ranging from minutes to days or weeks. At the top of the hour, when we go live on the TradingView platform and trade for 30 minutes, you'll see trades that generate substantial income. The trade only lasts a few minutes. Your exposure to the risk is limited. So be sure and stick around for that part. Better yet, take the free trial so that you'll get 2 hours a day, 5 days in a row in our live training room. Traders employ various strategies such as technical analysis. That's what we use. That's what we teach. Chart patterns, algorithmic trading, to identify short-term trends and opportunities in the market. They often rely on technical indicators and market signals to make quick trading decisions. Unlike investors, traders do not hold positions for an extended period and may engage in frequent buying and selling activities. Now, if you make 3 or more round-trip trades in the stock market in a week, you will be labeled by the SEC as what's called a pattern day trader. Once that happens, you must at all times maintain a $25,000 account balance. Otherwise, you'll get fined and you might even be told you can't trade. Futures, on the other hand, don't have any such requirement. Futures also have favorable tax treatment, but you can't get tax advice from me, that's for sure. You need to talk to a licensed tax professional and let them look up in their books, how futures have a 60-40 split. You can be in a trade for 2 minutes. 60% of your profit is taxed as long-term capital gains, 40% as short-term capital gains in a 2-minute trade. But again, I'm not a tax advisor and I'm not giving you tax advice. I'm telling you to make sure that your accountant or your CPA understands this law, because you might be the only client that your CPA has who is an active day trader. So you'll be educating them, or you'll tell them and then they'll go look it up and they'll go, wow. They'll go, wow. They might even say, will you teach me how to do this? Because that's a great thing. Trading for a living requires a deep understanding of market dynamics, how price flows, risk management, and discipline. Traders must be able to adapt to changing market conditions, monitor market news and events, and execute trades swiftly. The primary goal is to generate consistent profits from market fluctuations, regardless of the underlying asset's long-term prospects. With futures, you can be long, short, and long again, all in the same hour, if that's what the chart in front of you tells you to do. So let me put this in a nutshell. Key differences. Time horizon. Investing involves a longer-term perspective, while trading focuses on short-term price movement. Number 2, strategy. Investing emphasizes fundamental analysis and a buy and hold approach, while trading relies on technical analysis and frequent trading activity. Number 3, goals. Investors aim to build long-term wealth and financial security, while traders seek to generate short-term profits from market fluctuations. 4, risk. Investors prioritize diversification and risk management, which takes me back to that S&P 500 fund. While any one stock can go to zero, the S&P 500 will never go to zero. It may have some down days, weeks, months, even a year, but it always comes back. That's how it was designed. That's what makes it such a no-brainer. Now, when it comes to risk, again, investors are prioritizing diversification and risk management, while traders focus on capitalizing on market volatility and managing risk through position sizing and stop loss orders. When you're trading for a living, you must trade with a hard physical stop. Do not listen to this nonsense about, oh, if you put a hard stop out there, they're going to run your stops, whoever they are. That's just nonsense, okay? Number 5, lifestyle. Investing allows for a very passive approach. If you choose to buy an S&P fund, then you just got to keep feeding it every week, every 2 weeks, every month, whatever plan you set for yourself. Trading, however, requires active monitoring of the market and frequent decision making. So, investing and trading represent two different approaches to generating income from the financial markets. Investing is characterized by a long-term perspective, a buy and hold strategy, and a focus on wealth accumulation over time. Trading, on the other hand, involves a shorter-term outlook, active buying and selling, and a focus on capitalizing on short-term price movements. Understanding these key differences is crucial for individuals considering either approach to pursue their financial goals effectively. Ultimately, the choice between investing and trading for a living depends on individual preferences, risk tolerance, financial objectives, and how much time you have to work with. So now you know the difference between investing and trading for a living. Now, Valerie just sent me a message, the current recap. Thank you so much for that, Valerie. I simply need to grab it, paste it, and then format it for my screen so I can show it to you, as I do every day. Logic 247 is our around-the-clock, 24/7 Emini alert service. It's not just the E-minis, though. It's also crude, gold, bonds, euro, and there was a request this past week to add soybeans to the mix, and so I did. The request came from one of our passport holders, and we always do our best. I mean, I can't do every market, but I can do soybeans. I also do weekly zones for Ethereum as well, per request from one of our members. So here's where we stand this week. We're in week 252. This recap is current as of 12 noon Eastern. Now, normally the Logic 247 alerts start to flow Sunday night at 6 p.m. Eastern when the market's open. But because I chose to take the Monday holiday, we didn't start sending out alerts until Monday night at 6 p.m. Eastern. Since then, we've issued a total of 63 alerts, 11 never triggered. We're still waiting on 4. We've had 48 actionable alerts, of which 7 or 15% would have been stopped out based on not risking more than $300 per contract per trade, less when possible, based on market structure in a very simple 3-step process that we teach all of our passport holders in their unlimited one-on-one mentoring sessions. Now, the one caveat is you never risk more than the potential profit in a trade. Now, you can easily calculate the potential profit in a trade by simply looking at the entry price and the final trade to price in the alert. Most alerts have multiple targets. The initial target is designed to get your goal for the day. Now, an alert might have $1,000 of potential profit per contract, or even more. But if you know you're going to get out at that first target, which gives you your $100 per contract per day, then your risk should not be more than that. If you plan to stay into the second target, your risk should not be more than that. At no point should it exceed $300 per contract traded. Over the last 252 weeks, we've averaged, well, over the 252 weeks, we've issued over 14,200 individual handcrafted alerts. And we've averaged 20% or less of the alerts being stopped out based on the risk profile I just explained. Now, when the logic alerts come out, there's time built in so that our members have time to study the alert, study the 30-minute chart, see the window of opportunity that the alert represents, and then be prepared to take action with their smaller time frame range chart when price actually reaches the entry price of the alert. The logic alerts are based on current price action, but again, there's time built in for you to get the alert, study the chart. Now, I know some people just try to trade the alerts without, having to worry about learning how to trade. I can't prevent that, but it's a huge mistake. Our goal for you is to become self-sufficient. We want to get you to the point where you don't need anybody to tell you when to get in or when to get out. We want you to be able to just look at a chart and see exactly what we see. So if you use those logic alerts properly, the more times you repeat that process where you look at the alert and you look at the 30-minute chart and you see that window of opportunity, pretty soon you'll start seeing the window of opportunity before I even have time to post the alert. That's how it works if you use them right. Now, our original alert service, the concierge trade alerts, they're still happening. This is a static report published shortly after the Globex Open each evening. Some nights I get it out as early as 6:15. Last night I got the report out at 7:10. So every member, every trial member had these targets at 7:10 last night. I want you to keep that in mind later as we go to the charts, because Michael's going to be showing up here in a minute and he's going to give us a recap of the live training room. Then we're going to trade live for 30 minutes on the TradingView platform, and then I will recap every one of these markets. So what do you do with these numbers when they're posted? We'll use the ES for an example. The first thing you do is make note on your 30-minute chart of where price is at this time. It's always going to be between these two numbers. If price gets above the 30-minute BBC, then it's attempting to reach the long target. If price gets below the 30-minute BBC, it's attempting to reach the short target. It's that simple. You do have to look left to spot potential obstacles to the trade. Previous swing highs or swing lows can become current support or resistance. And over time, you'll learn how price behaves at a weekly trading zone. Price is always trying to reach a weekly zone. From the moment the markets open Sunday night till they close Friday afternoon, if price is above the BBC, then price is trying to reach the zone overhead. If price is below the 30-minute BBC, it's trying to reach the zone below. You gotta resist the urge to make it more complicated than that. And that's tough to do. As long as you know which way the wind is blowing, it's pretty simple to reach your goal for the day. Now, because this broadcast is open to the public, if you're not a member or a trial member, you didn't have these targets at 7:10 last night. So if you want to grab a screenshot, go right ahead. And then before this broadcast ends, we will walk through each and every one of these markets. While we're waiting on Michael to show, we'll pop up the daily chart. That's where we always start. You might say, why? I don't trade the daily chart. I don't even trade the S&P. That's okay. What the daily chart shows you is what the institutions are doing and what they're looking at. Institutions have accounts denominated in hundreds of millions and billions of dollars. It's their trades that actually move price. Us retail traders, we just provide liquidity. Doesn't mean we can't make money in the markets. All we have to do is look to see what the deep pockets are doing. We're not trying to outsmart the market. We're not trying to beat the market. The market's our business partner. Why would we want to beat it? We simply want to do what the market is doing long enough to get our goal for the day and then put the mouse away. So when this candle opened last night at 6 p.m. Eastern, remember the Friday session started last night, Thursday night at 6 p.m. Eastern. It's pretty easy to see what the institutions are doing, okay? So would I be interested at any point during this today of selling this market? No. And when we go to my smaller time frame charts, it'll be real obvious. But I encourage you, no matter what market you trade, spend 2 minutes with the daily chart before you sit down to find trade opportunities. You'll know which way the wind's blowing. You'll be able to identify major areas of support and resistance. And at some point during the broadcast, I'm going to put fib extensions on like I did yesterday, which will show us, based on 13th century math, where we anticipate price finding resistance as it moves up. We've been waiting since February 2nd for 42.44 to get broken. We came real close here. We came real close here. Came pretty close here. But today, we've done it. And because we're trading literally at the high of the session, unless something happens, we will probably close well above. That's step one. Step two, if the market does this: leg retrace, leg retrace, leg retrace, leg retrace, leg retrace. So here goes the leg. What we want to see is when the market does its retracement, does that February 2nd high hold as support? If so, we got a fresh bull market on our hands. Remember, we've been in a downtrend over a year, but things may be about to change. And let me add that, this is possibly irrational exuberance over the fact that the debt ceiling thing got resolved, okay? And so when that euphoria wears off, we'll see what happens then. So stay tuned. Michael is here. And again, once he's done and we're done trading on the TradingView platform, we will walk through the 30-minute chart of each and every one of the markets that we follow. And I'll explain exactly what happened to each market. If we reached the target or didn't reach the target, you'll see it all. Michael?
All right, I am ready. Okay, I got to show you something, Dwayne. When you come on, I wanted to show you earlier this morning, but I think he stepped away.
Did you see that picture I posted of little D in his cap and gown?
I did. He's looking pretty sharp in that cap and gown.
Yes, sir. And I was playing Purple Rain on my phone while I was taking the picture. Yeah.
Nice. Now I want to show you this.
Okay.
This from a seminar I did May 17th in 2014.
Wow.
And in that seminar, we had this. Do you remember these?
Uh-huh.
The underlying rhythm. I want to show you right here. The soybean underlying rhythm stands today. Those numbers that right there are taken from that. That was in 2014, 10 years ago. And you can see how it still stands today.
Amazing.
Yes, and this is using everything that we have today. It's perfect, isn't it?
Yeah. See, guys, when you build things that are based on the underlying rhythm of the market, which never changes, or the underlying principles of the market, which never change, they stand the test of time. You don't have to fix something. Yeah, that's 2014. I mean, that's, I don't know, 9 years ago?
Yeah, 9 years ago.
9 years ago. Awesome. Thanks for sharing that. I appreciate it.
You are welcome. I thought you get a kick out of that.
Yeah,
All right.
for sure. Okay, it's all yours. Looks good.
Here we go. All right. Good afternoon, everyone. If you have not taken a free trial with us, then go here to mytradingiq.com, and right here is a sign up for your free 5-day training now, 9:30 to 11:30 Eastern time. When you do that, you're gonna have to fill out a little form. It's a quick form. It takes you like 5 seconds, maybe 15 seconds to fill out. It's got drop downs. You have to enter your name. Depends how quick you type. You have to enter your name, of course. But once you do that, you'll be sent all the information you need to get into the room in the morning. You should also come here to trading platforms and give us all the information we need to get our platform on your desktop in front of you as soon as possible. Okay, that is what we want you to do. If you can do that, well, then then we'll set up a meeting. If you can't do it, if you have trouble with that, if it takes you more than 5 minutes to set up your platform, you need to get in touch with us, because this is stuff we do all the time, and it should not be a stumbling block for you. Okay, it should be something really simple and not a stumbling block. Speaking of stumbling blocks, I created stumbling blocks for everyone last night after the partners meeting, when I created a new feature that is the green arrow right here. The green arrow shows the highest probability trades that are arrows off a ribbon, right? The green arrow. But when I did that, I accidentally deleted the TIQ context. So I had to go and add everybody's name in again. And there were some names that, for some reason, I added the hundreds of names in manually last night. I missed a couple. So if I happen to miss your name, send me a text message. All right, in the spreadsheet, if you are going to look at the spreadsheet, you have to read all the CFTC risk disclosures down at the bottom. Today's the 2nd day of June, 2023. Today, we made 68 ticks on the NQ. We were well off our high of the day, but we made 68 ticks on the NQ. We lost 2 ticks on the Russell. We made 3 ticks on gold, and we made 4 ticks on the ES. The only one of these that was at the high of the day was this one on the ES. It was 4 ticks. We were over 100 ticks on the NQ at one point. We were at, I think, on the Russell, we were at 12 ticks at one point. On the gold, we were at 23 ticks at one point. So right at the end, I had kind of a rough go of it. But right at the beginning, 1 trade, 1 minute is all it took to get the goal for the day. At that point, it was up $900 a contract. I'm sorry, $900, not per contract. I had 6 contracts on, and I had 30 ticks on the NQ. So that was $150 per contract. So that is $900 is what it ended up being. And I took a total of 24 trades this morning. So on the month now, 2 days in, we're at $842. We've gotten our goal in 102 out of 105 days. Wow, I don't have much time at all to go through this. Let me go over here and get this other thing ready just to make sure I have it ready. Okay. Let me refresh there. It's probably gonna log me out somewhere else, but if you were to quit trading when you get your goal for the day and you were to add 1 contract per month, then Gary, okay. If you had 1 contract per month and quit trading when you get your goal for the day, you would only had to work 31.3 hours so far this year, when you would have averaged $1,479 per hour so far this year. Okay, now let's get into the trades that we actually did do. And we'll start out with gold. And I now only have 5 minutes to do all this. So on gold, we actually had quite a few trades on gold. Our first trade was a break even. Our next trade was a plus 17. Our next trade was a break even. Our next trade, that might have been a plus 1. I don't know. I think it was a 17. Our next trade was a break even. The trade after that was a plus 6. Then we stopped out. So at this point, we're at 23. Then we stopped out, put us back down to 13. Then I missed this trade in here. See the green arrows, guys. The green arrows. If you only do the green arrows, those are the highest probability trades. The arrows off the ribbon. I missed that one in there. Would have gotten it all back. I took this one and I stopped out. Not a green arrow there. You see. And I missed this one, which again would have gotten it all back. I missed that one, which again would have gotten it all back. I missed that one, which would have stopped out. And that was it. So I ended up with, after this last stop out here, I was at 3 ticks. There were a couple other nice trades here. This was during the break. Actually, right here, we had a beautiful trade right there during the break. One right here that would have been a break even, maybe a little profit, and one right here that was a great trade. And that was it during the break. So we ended up with just +3 on gold. On the Russell, we had a few trades there today too. You see the green arrows are just killing it again and again and again. The highest probability trades with the green arrows. And here we go. Our first trade of the day on the Russell was right here. We picked up 12 ticks on that first trade. Then our next trade was right here. We missed this green arrow. We took this one and we stopped out on that one. Somehow I stopped out on this. If I'd have gotten it in the right place, we'd have definitely, that was a mistake. That was a mistake. I stopped out -10. That put us down to 2. And then the next one that I did on the Russell was another mistake. See all these green arrows that I missed, even the black arrows that I missed. Okay, this one right here was another mistake, and I ended up losing 4 ticks on this. I got into this, it wasn't actually a valid trade, and I got out of it in here. I just took a 4 tick stop on it because it wasn't a valid trade when I get in. The red got into the black right there, so it didn't give me an arrow, and it's not a ribbon trade either. Okay, we took one more break-even trade in there, and that was it on the Russell. Okay, during the break here, there were some really nice trades, green arrow trades. I'm telling you, just follow the green arrow. All right, the ES now, we had just a couple of trades on the ES. They're both right here. We had a break even and a +4, and that was it on the ES. Okay, we get into the NQ where we had a bunch of trades. And on the NQ, the last couple of trades were stop outs. There's one of them. Hey, there's one where we got some back. I think a tick. Let's go all the way back to the beginning here. It's now 12:58, so we have 2 minutes. Now, if you have not taken a free trial with us and you want to take a free trial with us, go out to mytradingiq.com, sign up for the free trial right there on the home page. All you have to do is press the button and fill out the information. If you sign up today, we'll be able to get everything set up for the weekend. So you have all the information to peruse over the weekend. Okay. So you won't be just sitting there twiddling your thumbs all weekend. You'll be thinking about how much opportunity you will have starting Monday morning. All right, so just looking at the green arrows, it was one there, but this was our first trade on the NQ. We picked up 30 ticks, our very first trade of the day, and our first trade on the NQ. We got 30 ticks on that trade. The next trade was right here. We got 1 tick. Missed all of those. We had a break even there, and on this one, we picked up 1 more tick to get us to 32. Then on this one, we picked up 30 ticks to get us to 62. And on this one, I stopped out -1 tick. Okay, that put me to 61. Then we had a lot of flat in here. We didn't do anything, and we got 30 ticks here to get us to 91, break even. Then 4 ticks to get us to 95. Then 4 more ticks to get us to 99. Oops, that's kind of neat. 4 more ticks to get us to 99, and then 8 ticks to get us to 107. And we stopped out -20, and missed a whole bunch of trades all through here, and stopped out again, minus another 20. So I went from 107 down to 87. Somewhere in there, I got 1 tick right there, put me to 88, and then I stopped out here and put me down to 68, and that's where we ended it. All right, so it is 1 p.m. and time to jump into live stream. I'm going to go to the end of this. Now, I just wanted to point out for all you guys who are in here right now who don't know, the green arrows used to be black arrows. But what I wanted to illustrate is green arrows are black arrows off the ribbon. And I've been saying all along that those are the highest probability trades. If you just take those, you'll do just fine. Okay, especially if you're just going for the 2 points a day. If you just take the green arrows, you'll do just fine. If you follow the rules from moving the stop to break even, you follow the risk management, all that stuff, you'll be all set. All right, again, if you have not taken a free trial with us, go here to mytradingiq.com, click on that. Now it is time for me to start the live stream, so I am going to attempt to do this right now and share and start stream. All right, the stream is going. All right, here we go. If you have not taken a free trial and you want to, go here to mytradingiq.com, sign up for the free trial right there. Results today, in the room today, we had 68 ticks on the NQ. We lost 2 on the Russell. We made 3 on gold and 4 on the ES, but it's still 410. Today it took 1 minute, 1 trade to get to $900 in the room. Okay. That's enough about that. Let's get into the actual trading right now. Okay, so we added some, for those of you guys who are in here or on the stream, we created something new that I was just describing to everyone else. These are the green arrows right here. Now, the green arrows are what used to just be the plain black arrows, but they are arrows that are off the ribbon. And I've been saying that the arrow off the ribbon is your highest probability trade. So you can see there's one right here, there's one right here. If you follow the risk management strategy, then you'd have your stop at break even or lock in profit after 4 ticks there. You'd have your stop at break even or lock in profit after 8 ticks on the on the NQ over here. And if you just go through and you look at these markets individually, just where the green arrows happen to be. Now the ES did not have a ton of them today. There's one, there's another one, there's another one. Well, that's all the way to yesterday. This is 7 right. Yeah, the ES didn't have much movement today. Well, not much movement that you could trade anyway. So, but there were some opportunities there. And if you look at the gold today, you know, just looking at the green arrows, if you just take the green arrows, there's one to stop you out. But you're bound to have a stop out eventually, right? This one would have been a break even. You wouldn't have taken that with no higher swing. So if you follow the rules of the trades, the green arrows are going to keep you well above board. What we're waiting for now, right here on the gold, is a pullback. You see we had this huge move down. The long-term direction is bearish. We need to pull back up into the ribbon right here. If we cross down out of the overbought, that is still going to give us, it's going to give us a black arrow right now. If that happens, it's not your highest probability trade. Like this one right over here right now on the ES, not your highest probability trade. It gave a black arrow, but after direction change like this, we had the long-term direction was bearish and then it went to bullish. I like to have a nice deep pullback like this one that's happening right here on the NQ. If we get a down close on the NQ right now, that would give us a green arrow if it pulled it out of the overbought. Right, it's got a high of 90.75, so it's going to have a low of 86.75. So what you would do is sell 86.50 just like this. Okay, now the reason I know I can sell 86.50 is because the high of this bar is right here at 90.50. So the low of the bar is going to be, actually is going to be right here at 86.50. 4 points below the top of the bar is where the bottom of the bar is going to be at 86.50. So I can sell 1 tick below there because these are range bars. So I know if the bar is going to go all the way down to the bottom of the range and move to the next bar, it's got to close at the bottom and move right here. Okay, so that will give me the down close that I'm looking for and everything that I need to satisfy this trade. Now it didn't close down, it closed up. So now I have a new starting point. Okay, we have 91.50. So this all goes up 4 ticks. Okay, it all goes up 4 ticks from there. And I'm still waiting for this ES to pull back a little bit deeper here. Okay, that go up some more. It did 92.25. Okay, still at 92.25. So the low is going to be down here. The bottom of the bar is going to be here at 88.25. So if we get a down close and it pulls it out of the overbought, right, now that number's gone up some more, and now we're not going to put the trade here. I'm going to cancel that. Right. The problem now is going to be the black line right here is going to get into the green background, and that will disqualify short trades. Okay, now the CS trade is looking better to me. It's looking a little more appealing to me. Yeah, with the NQ changing directions right here, that's looking a little more appealing. This is not going to give us a trade. This is the arrow that I was talking about over here on the gold, the black arrow. If this crossed out of the overbought, I just told you that that was going to happen if it crossed out of the overbought. That's still not the highest probability arrow. It's there, but it's not the highest probability arrow. And the ES should at least get up to this level right here at 91.50, and the DOM suggests that it is going to go through that, and it's going to go up to 93. Is what the DOM is suggesting on the ES. Now, let me not extend left, not extend right. There. That's where it's suggesting it's going to go right now. The NQ is not moving down. See the black line right here, going into the green. That disqualifies all short trades. So we're not going to have anything there. Long-term direction is flat here on the Russell, so we're not going to have anything there. And we're just waiting for the ES to move up. I am going to cancel the order that I had waiting there on the ES. The gold, this is not your highest probability trade here on the gold. It should probably move down. The low of the day is right down to 68.6. It looks like it wants to go through that just a little bit, 68.5. But not your highest probability trade. Okay. It's a shallow pullback of a strong trend. Let's see. Gary's got a question for you when I'm done. Gary, he'll answer that when I'm done with the live stream in here. Okay, so at 1:30, I'll be able to get into that. Let me jump back over here. Yes, if anybody that's listening in the live stream right now has any questions, you can type them into the live stream. I'll be happy to answer them for you. Right. If you have not taken a free trial with us in the live stream and you want to, then go right there to mytradingiq.com and sign up for them there. Or you had two ribbons. They were the BB2 and BB3, Gary. Inside the context, it was these two right here. Oh, sorry, BB1 and BB2. BB1 and BB2. You see them going away inside there. BB1 and BB2. I added them back in because it was getting hard to tell when they got really close to each other what this was and what that was. That's why I added them back in. All right, so the ES is done what it should have done. It's put in a higher swing right now. This is the level that I thought it was going to get up to. Let's see if there's any other level that's popped up since then. Let's see on the ES. Yes, there's another level at 294 and another one at 295. So though it's been slow, the ES should get up to probably right here. I don't know that it's going to do that without a pullback, but that's what it's looking to get up to right now. Okay. Let's see in here. Lori Stephen Don. Yeah, Matthew. Back. It's funny. This was about. I don't know if you got in here when I showed that one thing. I showed this one thing. That was May 17th in 2014. That was about when I met your dad. Hey, brother, I was on the plane going to or coming from a seminar back then. So that might have been about when I met your dad. And that was the cover to the seminar, the cover to the pamphlet that I handed out in the seminar that I had done.
You would have been about 10 years old at the time.
Yeah, he would have been about 10 years old. Yep. And at that time, we handed out the soybean underlying rhythm to the people that attended. And that still stands solid today. That's soybean underlying rhythm. I was just showing Dwayne. I don't know if you were in here at the very beginning, but I was showing Dwayne, if you highlight the soybean underlying rhythm right here, this is soybeans today. And these lines were at the underlying rhythm that we put together back there 9 years ago in 2014. And you can see if you get an opportunity to trade off of one of these, you should expect to go to the other one. Opportunity to trade one, you go to the other one. Trade one, you go to the other one. Trade one, go to the other one. The other one, to the other one. Same thing over here. This one to that one, this one to that one. I only put on this bunch right here, but I could go down. I think the way that we had done it, the way that I had done it, I did it from 11 cents or 11 11 all the way up to 19 is what I had done. So we pretty much stayed in that range in soybeans all these years. Long time ago. Anyway, those of you guys who don't know, we've been doing this for a really long time. That's why we break things out that are that old, that have actual dates on them. Back then, when I was doing seminars back then, I did just a whiteboard seminar where I just wrote stuff on the white, went over concepts and stuff like that. I didn't want to bring a computer because then everybody wanted to bring a computer, and then everybody's got software and technical issues that you have to deal with. And I didn't want to have to do that. So I did it all with handouts. Long time ago. Thinking about that, my kids for, well, yeah, Matthew, you're the same age as my son. Yeesh. All right, so right now, on the gold. Now, this was something that we went over in the meeting last night. There was a question about if you're waiting for, say, the green arrow to happen, and while you're waiting for the green arrow to happen, you get a black arrow, like right in here, and you skip the black arrow waiting for the green arrow. Do you have to have the lower swing from the black arrow? And my thought is no. If you're waiting for the pullback to the ribbon, wait for the pullback to the ribbon. Anything happening on the way up to the pullback to the ribbon is what happens on the way up to the pullback to the ribbon. Okay. If you're just going to trade the green arrows off the ribbon, then just trade the green arrows off the ribbon. Don't worry about the black arrows. Okay. I don't know. You can't really make the black arrows disappear. There's no way to change that color to make it disappear. You know, the color for the black arrow and the green arrow is right in here. You can make the black arrows sort of, I guess, the opacity. You can make that like almost nothing. Like this. So then the black arrow just becomes a little shell like that, and then you only have the green arrows. If you want to do that, that's something you can do. I did not show that this morning. But I'd be happy to show it now. Okay, I just, for anybody that's watching that was in there this morning, I should probably point that out to everybody else too. That is an option for you. Change that thing within the black arrow if you're only trading the green arrows. All right, so speaking of that, let's see if we have any trades at all. I kind of want to wait until we get a lower swing and pull back up and we get a green arrow. We have the green arrow now on the ES. Now that's an okay trade to take there on the ES because we did get a little bit higher swing on this one. It didn't quite make it up to the swing high there, but we did get a higher swing above this one, above that one. So now our trend is going up here. We did have a little bit deeper pullback here, which is a little troublesome. But again, if you're just waiting for the green arrow, then there it is. And here it is. Okay. Gotta bump that stop to break even now. And I'm actually just gonna lock in one tick on that. And it should still get up to the same number. We can't see these numbers right now up here at 93, but 93 is still a solid number. So I'm gonna throw a target up there at 93. Okay. And then 94 and 95 are still good numbers too. Over there on the NQ, we got the green arrow on the short side on the NQ right now. Now, this is a direction change on the NQ. So you want to see it pull all the way back up and hit the ribbon like it did. It's kind of risky in here because it's, hang on, I took it, but I'm going to show you. It's kind of risky because it's not a strong trend where it is. So with the NQ, I have it automated to bump my stop to break even after I get 8 ticks in profit. It should bump it to break even plus a tick. And it bumped it, it slipped, and then only minus a tick. So now I bumped it to plus 2 ticks. I also have a 30 tick profit target on the NQ. Right. So we just end up with a couple of ticks on that and a break even, or a +1 tick on the ES. So a little bit of profit on each one of those. And now, was it 1 tick or 2 ticks on the ES? I didn't really, wasn't paying attention, but either way, anybody that's watching in the live stream on on TradingView, if you have any symbols other than what I'm using right here that you want me to go over, you just have to let me know. You just have to type it in. Okay, this stuff works and everything. Okay. Got a little bit lower swing there on the NQ with another green arrow. You know, that's a trade you could take if you want to right in there. Here. It's a trade you can take if you want to because it did satisfy the requirement for taking a trade. We got just a little bit lower swing right here. Long-term trend is bearish. We came back up, we hit the ribbon, we closed down. Now we need 8 ticks in profit to bump the stop to break even. And so it's got to hit right here to bump that stop. It hasn't done that yet. Okay, it's gotten pretty close, but it hasn't done it. So that's what we're looking for right now. All right, it's got a 20 tick stop on it. 16 tick range chart always has 20 tick stop. And the Russell's starting to take off. The NQ might go with it and stop us out. It's a possibility. The ES is starting to move up too. Gold is putting in a lower swing. That's good. That's what you want to see. Okay, looks like it's going to stop me out. If it does, it does. We want to get a higher swing here now. On the ES, we got the higher swing on the Russell. The long-term direction is starting to get bullish here on the Russell, so that's good. The NQ could still come back around. It's automated to bump to break even if it gets down here at 8 ticks in profit. So just follow the rules. Let it do its thing. There it goes. Oh, I don't know why it bumped it that soon, but it did it automatically. I'm going to put it at 1 tick in case I get any more slippage here. Okay, and there it goes. So now I'm going to lock in 8 ticks on this. And I'm out with 8. Okay, just letting it do its thing. Green arrow. Green arrow. Oh, guys, can't make it too much easier than that. Yes, if you like what you're seeing in here, any of you guys that are in the live stream right now, if you like what you're seeing in here, we do this every day from 9:30 to 11:30. Okay, every day from 9:30 to 11:30. The only way you can get these indicators is to take our trial. If you do take the trial, we'll get your indicators set up for you today, as quickly as we can. Go to mytradingiq.com. It's right here. It's really simple. Go to mytradingiq.com, click that button, and don't ask for any credit card information or anything like that. It's just this little form right here. Fill out this little form, a couple of drop downs. Sure to take the trial with us. Do you trade? What do you trade? Who you referred? That kind of thing. If you're in TradingView, watching this in the live stream in TradingView, give us your TradingView username right here, so we can set up your indicator set. Now we set that up, so it happens really quickly. It's not like we farm it out to somebody. We do it ourselves. So it's a quick process. Again, if you're watching us on TradingView and you haven't already started following us, you should probably do that too. To be notified whenever we do one of these things, or whenever there's a change, like that one I did last night. The green arrows. The green arrows used to be black arrows, and I used to tell you, anytime you get a black arrow off the ribbon, that's the highest probability trade. Now I just put the green arrow so you know without me having to say it. All right, so it's 121. Wow, this is going by pretty quick. But we had a little bit of profit there, a little bit of profit here twice, and nothing on gold and nothing on the Russell. Now, 9 minutes is still a lot of time for trading with these markets. I could get 5 more trades or none. But the gold you see is pulling back. We're in the overbought now on gold. Now, there are 2 things that you need to initiate a trade. One is to get into the ribbon, and the other is to get into the overbought. So either one of those can initiate a trade. Now, so far we've gotten into the overbought. That's enough. but it could pull up and get into the ribbon as well. That would make it better. The ES just hit that level that I gave you as soon as we started this. If we get a down close over here on the gold and it pulls it out of the overbought, that would be a valid trade. You could take that. Okay, the NQ did not finish the trend right here, did not continue the trend, so we don't have anything going on here. So the long-term trend just flattened out. The ES did continue the trend. Remember, I was pointing, I kind of pointed at it and alluded to this trend line right here. You see that? Symmetry. The Russell needs to pull back pretty deep now. It's a direction change here on the Russell, I think. Well, it's not really a direction change, but you need to get a pullback here. Okay, the gold just gave the short in there, so I'm going to try to short the gold, and I just did short the gold. Now, this one did not actually hit the ribbon, but it got pretty darn close to it on the pullback. Right, so I shorted it, and now we're at, well, we were at +2. It's going to get down here to 8.4, and I'll bump that stop to break even. Now, the gold trade we took yesterday, guys, that ended up being a break-even trade. It lasted forever, and we ended up closing out this session yesterday while that trade was still. That ended up being a break-even trade, just like that. Okay. So now I've had a break-even on gold, a +1 here, +1 or 2, a +1 and a +8 here, and nothing on the Russell so far. So in 23 minutes, we've had 4 trades. All either break even or profitable. And to be break even, they had to actually give at least 4 ticks in profit for these 3 markets, or 8 ticks in profit for this one. Put in the higher swing now on the ES. I wasn't thinking it was going to go up this far without pulling back, but it looks like it is. The Russell's still moving up, and we'll probably see the NQ go up as well. All right. Does anybody want to see anything else? I'll get like Apple. You can look at stock. Now, I would not do Apple on a 7 range, but I'd do it on a 50 range, something like that. So every bar is 50 cents. Okay, and if you look at that, blow it up a little bit. See all the green bars. That one didn't work out. These would have been 1 bar that's still working. All these are highest probability trades. Okay, and that's Apple. You can look at anything. Tesla. I don't know what Tesla's at right now, but yeah, let's still use a 50 range on this. The green bars, you got highest probability trades. Right, this was a pullback right here, so it didn't really give you anything. It's part of this pullback. And this push up right here should get up to this level right here. Really, you can do this with anything you want to trade. I don't remember that happening before, but let's bump this back to GC futures. Q. All right. And put this on back on the 7 range. All right, so this pullback right here on the Russell now, it's a pretty deep pullback. All things considered, it's a pretty deep pullback. We're coming out of the oversold. That's why we got the black arrow right there. Long-term direction is bullish. Now, if it were a trend change, meaning we were in a downtrend here and then we went to an uptrend, I would look for a much deeper pullback. If you want to wait for the green arrow here, that is something that you can definitely do, right? Like over here, if you waited for the green arrow, you didn't stomp out on that one and you got in on that one. So here it comes down for the green arrow right now. Okay, over here, if you waited for the green arrow, then you didn't get a break even on that one and you got profit on that one. Over here, if you waited for the green arrow, you got nothing. Same thing there. Okay. That is definitely something that you can do if you choose to do. If you only want to trade the green arrows. they are the highest probability trade. All right. It's 1:27, guys. I only have a few minutes left in here. So, again, if you have any questions about anything, just type it in. I don't know if you guys saw this, but this was from a seminar that I did back in 2014, soybean underlying rhythm. And this is what it looks like today, 9 years later. Same underlying rhythm still holds true. All these lines that I drew in here, those are from the underlying rhythm 9 years ago. And they still hold true. Put that up. That's kind of neat stuff. All right. So over here right now on the gold, we wanted to put in a lower swing here to really get a decent pullback. But if you're waiting for the green arrow, you're not going to get here. You're not coming out of the overbought. Right? It's got to hit the ribbon and come out of the overbought at the same time. Same thing here with the Russell right here. It didn't go all the way back down to test the ribbon. That's why you're not getting a green arrow here as it comes out of the oversold. Right? This is probably going to work its way up to right here. It's 25.9. I don't think I put a trade on there today. No, I am not long right now. No, I am not. That's it, guys. It's 1:28.5. So we've got about a minute and a half left in here. Anybody's got any questions? If you like what you see here, we do this every business day from 9:30 to 11:38 a.m. Sign up for the trial. The only way you're going to get these indicators is to sign up for the trial. It's a really simple process. Okay, now over here, if we get a down close right now and it comes out of the oversold, the overbought, then we'd have our green arrow. If you're waiting for the green arrow, that is what's going to do it. 96.7. So right now you would be selling 0.7. It's going to drop down 8 ticks to 0.9. Okay, so that's what you would be doing right now on the gold. Selling 0.9, looking for this to come out of the overbought. Right, that's as long as the top remains there at 69.7. That just went up, so this goes up. Now this is probably not going to turn into a trade. It's not. Okay, and it's pretty much time for me to put it up anyway. So the Russell put in the higher swing. That's good. The green arrow here did everything that it should have done. That's good. These green arrows, they gave some profit. That's good. They didn't put in the lower swing. That's okay. The Russell, I'd be looking for a pullback now for another opportunity. And that's going to be it, guys. Again, if you're following along in TradingView and you are not literally following us yet, click the follow button and you'll be notified whenever we do something like this. Okay. We trade just like this every day, Monday to Friday, 9:30 to 11:30 a.m. The only way you're going to have access to these indicators is to sign up for a free trial. Do that at mytradingiq.com. Right here, mytradingiq.com. Just click that button and be brought to this page. Fill out this little form. So you have to fill out the form. There's no credit card or anything like that. Just fill out the form. You'll be sent all the information you need to get access to the indicators. If you're on TradingView and you want access to the indicators, you just need to go to TradingView ID. All right. That I am going to go back over here and wrap it up for today. So we had a break even here. We had a +1 or a +2 or something like that there. And I think we had a break even there too. And we had a +1, 2, and a +8 there. And now I'm ready to stop the stream. Thanks for coming today. That's it. I'm going to wrap it up. Thanks for coming today, guys. Sideware, the trial is absolutely free. Okay. Don't, no credit card required or anything. Just sign up for the trial. All right. The stream is over. And now I can pass it back out to the fabulous James Harris. I'm in the studio able to myself on so I just sit park.
And speaking of the free trial, no double dipping, folks. We have ways of knowing, so, you know, don't embarrass yourself.
Yes.
Okay, recap of the morning session.
Today it took 1 minute and one trade to get to $900.
Man, that's a happy Friday.
It is. It is. It's a nice way to go into the weekend.
You bet. And guys, while Michael was doing the recap, Valerie sent, or while Michael was trading, Valerie sent me an update to the Logic 247 recap. This is the one I just shared with you as of 12 noon. Now, as of 1:15, since Monday night at 6 p.m. Eastern, normally it's Sunday night, 6 p.m. Eastern, when the Logic 247 channel opens, but because of the holiday, it was Monday night. We've issued 63 alerts. 11 never triggered. Still waiting on one. That's 51 actionable alerts, of which 7 or 14% would have been stopped out based on that risk profile I explained at the very beginning of the broadcast. And if you missed that, just go to youtube.com/CFRN an hour or so after this broadcast ends, and you can watch the entire broadcast from beginning to end. I also showed everyone earlier the concierge trade alert numbers, which all of our members and free trial members got last night at 7:10 p.m. Eastern. Because this broadcast is open to the public, if you're not a member and not a trial member, you didn't get these numbers. So we're going to walk through each market real quick. So if you want to grab a screenshot and follow along, you can. And where I talk about drawing a line in the sand at that number and a line in the sand at that number, because they serve as great visual cues to keep you on the right side of the street. As we go to my charts, you'll see what my lines in the sand look like. You can make yours look any way you want. Okay. All alerts, the logic and the concierge, are based off of the 30-minute chart. Now, on the daily, I had said I would apply fib extensions, and I will. Now, I did this yesterday, and then I took them off because it was just crowded. So it's the same 13th century math as fib retracements, but applied in a different way. Regular fibs are trying to show you where the market's most likely to find support based on the golden ratio, okay? Fibonacci extensions give you targets into the future where price may potentially find resistance. So for those of you that use DT Pro, this is your fib retracements and this is your fib extensions. So I'm going to click that and I'm going to go to what was the current high before today. I messed that up pretty good. Take another shot at it. Okay, I'm going to go from this high. I'm going to drag it down to what did I do? this is supposed to be here. This was the high, then price pulled back to the BBC, which is what we expect. Price always reverts to the mean. In our case, the mean is green. It's called the BBC. Stands for bull bear cross. When price crosses above it, we're bullish and anticipate higher prices. Price crosses
Hey guys, Dwayne's electricity just went out, so we're going to hold tight here for a few minutes and see if it comes back on. Okay, Dwayne said that his battery backup didn't work, but the electricity is back, so he's rebooting. He'll be here in a couple minutes. you shouldn't have to re-sign in, Gary. I think as long as I am in here, he can just log back in. There he goes.
Thanks, Val. I'll be back in the saddle here in just a second. I've just got to restart the streaming software, so I don't know if we lost that first portion or not. I'm just going to call this part 2. June 6th, 2023. Oh, then I gotta put that in. My battery backup, that thing's not even a year old, and it is not working properly. I'm gonna have to see if I can return it. Right at Walmart, but it's a name brand, so it should have been fine. Thanks, Claire. Everybody should, if anybody that's still here, should still be here, because now for those who on YouTube come across this part 2, June 6th, I lost electricity, my battery backup failed. So I don't know if YouTube is going to grab part 1 and archive it. If not, Valerie has a recording, so we'll get it uploaded. So for those of you that stumble across this broadcast on YouTube, if the electricity doesn't go out again, well, just look for part 1. Okay, so let me get back to where I was. Here's what I was attempting to do, because I was doing it wrong. That's probably why it happened. So let me do it right. What I'm doing is applying fib extensions to the daily chart. Okay, so yesterday I went from this swing low to this swing high, and then you grab this little guy and you drag that over to the retracement low. So what you're doing is you're taking this low, connecting it to this high, and connecting it to this pullback low. And what this does is, instead of painting retracement levels, it forecasts into the future where the market may potentially find resistance. And this is a very short-term view. So if you want to write that number down, you can, okay, because that's based on the most recent leg, retrace leg. But I'm going to take these off and I'm going to do it bigger picture. So I just highlight this. Hit delete, and away they go. Now, so if we look at this chart, we know that the downtrend low came in October 13th. just way back over here. I'm not going to go that far back. I think we can all agree that this is a significant low in the market right here. So I'm going to grab my tool, because what we have is a leg, a retracement, and a leg. Okay. So I'm going to grab my tool. I'm going to connect this low to that high. And then I'm going to grab this and connect it to that low. So now we're using Fibonacci extensions based on the swing low. I mean, this was a nice leg down. So we had a leg up, we had a leg and a retracement, a leg and a retracement, and a leg and a retracement. So we're going from the bottom here to the most recent swing high prior to today, connecting that to the retracement low. And so now we get a very different picture. We've already exceeded a 24% extension of this leg from this low to this high. 100% extension would mean that we travel the same distance in points from this low to this high. So doing it that way, potential resistance overhead is at 43.21. Then a 50% fib extension would be at 43.68. The 62% extension would be at 44.16. And a 100% extension of the last major leg up would put the market at 45.70. And that's how you do it, using this. You use this tool to draw your retracements. You use this for your extensions. Could I go all the way back to the October 13th low? I could, but I think this will serve us well, because we basically kind of had a triple, more than a triple bottom across. This is a very significant area. So I went from the low to the most recent swing high before today, and then connected that to the retracement low, the pullback to the BBC. The pullback holds more often than not. And so the software, using the golden ratio, tells us where, based on the previous leg, where we can expect to find resistance. 43.21, 43.68, 44.16, and 45.70. Okay. Okay. All right. So Gary, I know it was you that had questions about that. If you have any additional questions, just post them. If anybody has any questions about it, just put it in the question box. Got it, Gary? Okay, great. Fantastic. If anybody else has any questions, just put them in the question box. All right. So let's go to the ES. And the vertical line on the chart separates today, Friday, from Thursday, from Wednesday. Now, because I didn't save my layout this morning yet, I gotta stretch these over. But remember, today, Friday, began last night, Thursday night at 6 p.m. Eastern. This candle right here. This is the 6 to 6:30 candle. This is the 6:30 to 7 candle. This is the 7 to 7:30 p.m. Eastern candle from last night, and it was at 7:10 p.m. It was during 10 minutes into the life of this little red candle that I published the CTA report. We never had any reason to consider trading to the short target. Why? Because price stayed above the BBC. As long as price is above the BBC, we're only thinking long. When price gets below the BBC, like back here, then we're thinking short. Okay. So the market opened and price was trapped. And we talked about this last night in the workshop. Guys, if all members, if you weren't in the workshop last night, I encourage you to watch the video over the weekend. It's in the workshop channel. And I had drawn in this window of opportunity, which, as we can see, this candle here filled perfectly right up to the top of the window. Okay. So, but we couldn't do anything until price got above red and falling, because red and falling represents resistance. The minute red and falling turned to blue and climbing, now we're ready to get after it. This candle opened at 42.33 and ran up to 42.40. So that's 7 points, $50 a point, $350 per contract traded. But price kept going. It hit the next zone overhead where it consolidated. And then we got a leg and a retracement. Now this candle right here was at 8:30. There was some econ news. So we don't trade in front of news reports. Okay. So we pulled back. And even though we spiked the BBC, by the time the 30-minute candle closed, the pullback held. And off we go again up to the zone, which we expect to be resistance. And it was. Sent us back down. We found support at blue and climbing. And that sent us up to the zone again, where we found resistance. And so then we pulled back to the step line where we found support. And this time it was able to push us through the zone. And our highest weekly trading zone for the week is up at 43.60 on the ES. And these are the zones that were published Tuesday morning at 6:15 a.m. Eastern. When it's not a holiday week, they come out Monday morning at 6:15 a.m. Eastern for our members. Now, we have a situation where the step line is starting to cross blue and climbing, which means this could be the high of the session. We won't know until today's session ends. The step line hasn't fully crossed over, but when this next candle opens in 4 minutes, there's a high probability that it's going to start printing red. Okay, and that's going to drag the step line further across. And that's when we'll look for a pullback to the BBC. Price always reverts to the mean. So we got a weekly zone and the BBC. So that's what I refer to as support times 2. Okay. Now, if you remember, and you got these targets last night, and you've been with us any length of time, you would have known exactly when it was safe to enter the trade for a run at the target. Now, we consider just 2 points goal for the day in the ES. 2 points in the ES at $50 a point is worth $100 per contract traded. Once you're in the right to trade 2 contracts, then the same 2 points, this is what this represents, is about 2 points. Then 2 points is worth $200. At 5 contracts, 2 points is worth $500. At 10 contracts, 2 points is worth $1,000. Now, when you become a lifetime member, you don't start trading real money right away. You haven't learned the strategy yet. You haven't learned how to read the indicators yet. The 24/20 blueprint is going to walk you through the process of putting together 10 consecutive days in a row in your demo account where you reach your goal in 10 trades or less. Once you accomplish that, then the blueprint gives you the green light to add a second contract. The big difference between the first and second contract is the first contract is funded with your startup capital. But the second contract is funded with profit you earn in the market. The blueprint will notify you when it's time to add number 3, number 4, number 5, all the way up to number 20. It's called the 24/20 blueprint because it's designed to help you go from 1 to 20 contracts over a period of 24 months. Not a get rich quick scheme. And you should never feel compelled to trade more contracts than you're comfortable with. Just because the blueprint says it's okay to add number 3 or number 4 or number 5 with profit you've earned in the market doesn't mean you have to. So again, some people get to 5 contracts, 2 points in the S&P, that's $500 a day. That's more than they ever made at their day job, okay? And they're comfortable with that. And so if you spend the rest of your life making $500 a day, that's not a bad deal. If you're more aggressive and you want to go to 6 and 7 and then 10 and then all the way to 20, you have that freedom. I just don't want you to think that you have to, okay? If you find a comfort zone and everything's, running on all cylinders, you don't have to change it. You might get the green light to add contract number 5, but you just, in your spirit, don't feel like you're quite ready for that yet. Okay, stay at 4 until you feel you are. And if you never feel you are, then just stay where you are, as long as you're consistently profitable each day. And again, 2 points on the S&P, that's what we're looking at, 42.20 to 42.22. That's 2 points. Now, some places will teach you that the key to success in the markets is to get more points. We take a different approach. We teach you to get real good at making $100 per contract per day. So that's 2 points in the S&P, or 10 ticks in crude, or 10 ticks in gold, whatever makes you $100 per contract. And then as you build your account size, you add contracts when it's time, one at a time, with profit you earned in the market. If you have the discipline to follow that, it makes it difficult to blow up another account. I mean, you got to break some rules for that to happen, okay? It's really important that you get those 10 consecutive days in your demo account, because that's proving not to us, but to yourself, that you understand the strategy, that you understand the indicators. Now, it's not uncommon that someone does their 10 days, they get the green light to go live, they go live, and because there's real money on the table now, they fall apart. Their nerves get the best of them. Most people in this audience probably wouldn't think twice about, taking the spouse out for dinner and dropping $100 on a nice steak dinner. But there's something about losing $100 in the market that's just, no matter how much money you got to separate your emotions from your trading. Otherwise, you just won't succeed over the long haul, okay? You get stopped out, you get stopped out. You just look for the next opportunity. It's that simple, okay? So even though the market provided us with a nice 7-point move up to the target, and then much, much more, you should never feel obligated to take advantage, and don't ever, cry over what you left on the table. Oh man, look at all the money I left on the table. Did you get your goal for the day? This candle opened at 42.33 and ran up to 42.37. I'm sorry, from 33 to 37. That's 4 points in that one 30-minute candle. right there. It's still Thursday night at 11:30 p.m. Eastern. And by midnight, you've already got your goal for the day. You've already got Friday's goal. Boom. You take the day off. When you come back Sunday night, when the markets reopen, you can go, oh, wow, how cool is that? Now the question right here, the step line has crossed because we have a new candle. We're 4 minutes into the new candle. If we take out this swing high, then the step line is going to go back to the left side of blue and climbing, which means there's still more upside. If price cannot take out the current swing high at 42.94, then we're most likely going to see a retracement, possibly back to this swing low, and then this swing low, and then the BBC. The pullback holds more often than not. As much as the market has rallied today, I'd be very surprised to see it rally all the way to the highest weekly zone. Now, when we publish the zones Monday morning at 6:15 a.m. Eastern, we're not saying that price is going to go to the lowest zone or go to the highest zone. What we're doing is we're creating a playing field, if you will. Imagine you're at a football game and you're sitting on the 50-yard line. As you look left, you got the 40, the 30, the 20, the 10. You look to the right, you got the same thing, okay? Price moves from zone to zone to zone. Go back to the 28th was Sunday night, the 29th. This is when I was computing the zones, and then they came out at 6:15 on Tuesday morning. Oh, maybe it was over here. Anyway, yeah. But when price drops to a zone, we expect support until proven otherwise. Got a nice little double bottom there. And then price pushes up to the BBC, which we expect to be resistance until proven otherwise. So as price is coming down, we expected to find support. As price rallied up, we expected to find resistance. As price pushed down, we expected to find support. Eventually, after consolidating, 70% of the time, that's what will happen at a weekly zone, is you'll see the market consolidate. 20% of the time will be rejection, okay? That's when the 30-minute candle closes and the only thing left touching the zone is the wick. That's 20% of the time. This is 70% of the time. Now this zone is actually 41.95/96. So you could still call that rejection. Support will always send the market looking for resistance. Resistance will always send the market looking for support. It's kind of cool to know ahead of time where the market is most likely to find support or resistance. So down here, the zone 72.73, the swing low is 74, okay? So if you're in this short trade coming down, as you get close to that zone, you need to start tightening up your stop, okay? Be ready to take profit because zones are an area just like fibs. So if you were trying to squeeze that last penny out of this, it took you down to 74, okay? But if you were bound and determined to get to the zone at 73, guess what? You gave back all your profit. So support kicked in 1 point earlier than we thought, which set us back to resistance. And then we get a jumbled up mess. And when your chart looks like this, don't trade. You want nice, clean swings. This, no bueno, okay? See how we consolidated along the zone there? And we got below the zone. We attempted the zone below, but we ran into support that was established the previous day. And that brings us all the way back to today. Okay. Gary said price is stalling right now at last week's zone. That's a good eye there, Gary. Last week we had a zone at 42.92/93. Good eye. Right here, this was last week's highest weekly trading zone. Now, I suggest you keep a journal all your trades, and write down the weekly zones for the markets you trade, because, see, I already had said, I highly doubt that the market will make it all the way to the highest weekly zone. But because Gary remembered that last week the highest zone was 92.93, then it becomes, couple that with the fact that the step line's crossing over, and it becomes completely logical that this would be an area of potential resistance. See, none of it's magic, none of it's about any secret. You know, the only secret of the markets, there's no secret. And the only holy grail in the market is learning how to trade, okay? Understanding how price flows across all markets and all time frames. That's great that you spotted that, Gary. Thank you very much. So this was last week's highest weekly trading low, 92.93. And it looks like we're going to get that pullback. Now remember, we could find support at that low, at that low, at that low. If we take out that low, then we're probably headed back to the zone and the BBC. Can support just show up out of nowhere? Absolutely. But we don't know the future. We don't know what's going to happen next. We just know what the next high probability thing is. And the high probability thing is that price is going to drop until it does find support. Until institutional buyers, I mean, we've had a huge move up. You know, taking out that February 2nd high was a big deal. A lot of institutional traders made a lot of money on this run up. Can you blame them for wanting to take profit? So the boss is happy with them? Not at all. So along with hitting that zone, technically, there is the fundamental aspect of a bunch of people made a bunch of money and they're taking profit. Okay. All right. So we hit the zone and then some on the Dow. Everything's out of whack because my computer crashed. I'm just glad I was able to get it back up and running so quick. And thank you, Val, for keeping it going while I was. Anyway, so here's where price opened last night. Here's where the market opened last night. At 7:10, the alert came out. And it wasn't until red and falling, first price. See, we were above the BBC, so we're not thinking about the short target. As long as we stay above the BBC. And once red and falling turns to blue and climbing, well, time to go long. This candle opened at 33,144 and at 164. That would be your goal for the day, right there in that 130-minute candle. But we kept going, and we pulled back to the BBC, and the pullback held. And that's the highest weekly zone for the Dow. Step line crossing, burning a red candle. Let me see what the highest zone was last week. last week, the highest zone for the Dow was 34,380. Below that was 33,840. Right there. Huh. So, as I explained at the beginning, okay, once I publish those CTA targets, all you got to do is just be patient and wait for your 30-minute chart to set up. And the more experience you get with the strategy, you might just trade right off the 30-minute chart. But in the beginning, use the smaller time frame, the 10-tick range, the 7-tick range, okay, so you're able to limit your risk, etc. And right here, you're done for the day. Don't worry about what you left on the table. On the Russell, well, the Russell really turned into a rocket ship. Price right here, see, you can't do anything because you got resistance overhead and you got support below the BBC. The price pulls back to the BBC, we expect it to hold. It holds more often than not. Whether it's pulling from above or pulling up from below, it holds more often than not. So you get blue and climbing on this candle. This candle opens at 73 and runs up to 74.50. So you're still in it. And now you're up to 77. So if you entered on this candle, that would have given you a go for the day in one candle. Okay. But the earliest you would have entered would be this candle because you're back. You've now red and falling is now turned to blue and climbing. Okay. So where does price go? It goes right up to the target, to the zone, which we expect to be resistance until proven otherwise. That resistance sends price back to support at the BBC. And then we climb up to the next zone. There's some consolidation. And we are very close to the highest weekly trading zone this week for the Russell. The step line is crossed. So if this red candle comes down below the step line, then it could find support at that low, at that low, that low, that low. And if it takes out that low, then it's probably going to the BBC, where it will probably find support. That's how it turns out. On the NQ. Now, again, the alerts aren't just so you can make money as a trader without having to learn how to trade. I mean, if you choose to do that, I can't stop you. But don't you want to learn how to trade so that you're not dependent upon anyone to tell you when to get in and when to get out, kind of thing? We get above the BBC here, but we've got the zone right overhead. And we know that is potential resistance. So we consolidate, and we pop up. This candle right here, look left. So this is the candle. Once this swing high is overcome, it would be this candle that you would want to enter on. From 529, it ran up to 562. 30 points, $20 a point, $600 per contract traded in that one candle. Then we pull back, hit the target again, pull back to the zone, we spike it, but the pullback holds because these candles are still touching the BBC. And then we make another run through the target. Then we go sideways. Now we've got the step line crossing blue and climbing, price pulling back to the BBC. If the BBC holds, then there'll be a trade opportunity to the upside. If the pullback doesn't hold, then that will create a window of opportunity down here. Now, on the logic alerts, the initial target is always $100 per contract on every market except the NQ. On the NQ, the initial target is $200 because you need more risk on the NQ because of its volatility. Okay. So if this holds, there'll be a trade opportunity to the upside. If we fail to hold, there'll be a trade opportunity down to the zone. Okay. Crude. Okay, so the alert, the CTAs came out on this candle. The report was published. Price had to get above red and falling. Red and falling had to turn to blue and climbing. So this candle here opened at 70.28 and ran up to 70.46. That's $180 per contract traded in that 130-minute candle. So we got a leg, a retracement, and a leg that took us to the target and the zone. We consolidated, pulled back to the BBC, the pullback held. That took us to the target again. Leg, retracement, leg, up to the zone, which we expect to be resistance to proven otherwise, and it was. And that sent us back to the BBC, which was support. Once blue and climbing starts to arc over and it gets directly above price. See, here you've got price, and to the right of it, the BBC. But over here, you've got price with the blue and climbing right overhead. I meant blue and climbing. I think I said BBC, whatever. Blue and climbing gets directly above price. That's potentially resistance because it's on its way to becoming red and falling. Okay. Just as red and falling turns to blue and climbing turns to red and falling. So now we have a true obstacle right where price is on crude. Price has to overcome red and falling. It has to overcome that swing high. And really, I wouldn't want to trade crude long until these two highs are taken out, and then I would trade it up to the zone. Is there room to squeak out a trade in here? No, it's too tight. There's no reason to take a trade that is sketchy or doesn't satisfy the rules, the requirements, because you can just wait for that market to set up again, or you can just go look at a different market, because we're not teaching you how to trade a specific market. We're teaching you how to trade. That's a valuable life skill. Once you learn that, nobody can ever take it away from you. And once you understand that price flows the same across all markets and all time frames, that's futures, that's stocks, it's crypto, that's Forex, it's ETFs, daily charts, weekly charts, monthly charts, 30-minute charts, range chart, text charts, price flows the same. So we're up against resistance. So got no interest in trading here, but then again, the market already gave us plenty of opportunity to get our goal for the day. Next, gold. Poor gold. That must have hurt falling like that. We did, however, reach the long target and the short target. Two-sided action. Price gets above red and falling, and then on this candle, by this candle, you've got blue and climbing below you. So this candle opened at 97.6. Let's call it 98. $200 per contract traded up to the target. And we pull back to the BBC, and then you could have traded this move here. Opened at, call it 96, and it ran up to 98. $200 per contract traded. Then price gets below the BBC. Blue and climbing, turns to red and falling. And down we go. All the way to the target. Why is the target there? Bullish cross. When you have a bullish cross that leads to an extended move, the first time price revisits that area, it will almost always be good support. And it was for 1, 2, 3, 4, 5 candles. And then it finally gave way. Now this is a slice. Price sliced through the zone like it wasn't even there on the 30-minute chart. What typically happens when we have a slice, 10% of the time, is price will retrace to the zone it sliced through and then continue in the direction of the slice. This time, there was so much selling pressure or lack of buying pressure that it wasn't able to pull all the way back. It's now continuing down to the next zone, which is 65/66. And the current low well, the low of this candle is 66.5. So since the zone is 65/66, I would not even be interested in getting involved with this because you don't have enough room to run. I'd wait to see if price gets on the other side of the zone. And then I would look left to see what potential obstacles there were. And then I would trade this area down here. Or I'd go look for another market. Because we trade every market exactly the same. Silver, you need a 2-penny move to reach your goal for the day. We did not hit either target. But did we still have a chance to get our goal for the day based upon the information provided? Yep. Market open here, pull back to the BBC, the pullback held. Price got above red and falling, and that turned red and falling to blue and climbing. So this candle right here opened at 23.98 and ran up to 24.08. That's $500 per contract traded in that one 30-minute candle. And it kept going up to 24.12. But remember, you only need 2 pennies. That's $100 per contract traded. Then price got below the BBC, and here's red and falling. And once we get below this zone, I mean, could you have traded this down to the zone? You could. Was there 2 pennies in there? Sure, and more. Now we've dropped to the next zone, which is acting as support. When price drops to a zone, we expect support. When it moves up to a zone, we expect resistance until proven otherwise. Like this. Runs up to the zone, resistance. Pulls back, takes another run at it, manages to get through. So this candle sliced and it pulled back almost to the zone. 23.88.89 is the zone, and this low is 23.89.5. Okay. On a slice, expect price to retrace to the zone it sliced through and then continue in the direction of the slice. Over and over again and again. See, for new people, it may seem like what we're doing, I mean, they got so many rules and, oh my gosh, I don't know if I can learn. This is so humbly simple compared to some of the complicated strategies and stuff that I've seen. Oh, I got to check the trend. I got to check the tricks. I got to look at my Bollingers and my Keltners and my RSIs and what, to take 2 points out of the market? Really? I don't think so. Now, I'm not knocking any of those indicators. I'm sure they all do exactly what they were designed to do. But earlier in the week, we talked about how having too many indicators and too many oscillators can mess you up for a number of reasons, because many of them are computing the same thing, just displaying it in a different format. And that makes your computer lag and your charts lag. And, well, I don't think I have to say any more. That's why, I mean, compared to most trading charts, this is like bare, what was that group back in the 90s? Bare Naked Ladies? Yeah, this is a bare naked chart, okay? So as we drop, where do we find support? At the zone. Will we trade through it? I don't know. But if we do, where do I expect the market to find support? At the previous bullish cross. That's why the target's where it is. On the euro. This is our last chart. We have hit the, well, here's where we opened. We got above, and climbing. So it isn't quite as smooth as the other ones, but the market moved up enough here to give you your goal. Price got below the VVC, along with red and falling. And in one candle, we went from zone to the zone to the tick. This window that I drew in, I think last night during the workshop, got filled in one candle. Because we were talking about what happens if price doesn't get above, what if it drops below the BBC? So those of you who are members, and if you watch the workshop video over the weekend, you'll see me draw this in. And there it is, okay? And again, no magic, no secrets. We teach everybody everything. All of our members are using the same strategy, the same indicators, and we have a very vibrant trading community. So when you come aboard as a new member, our traders are very, it's not like a lot of the trading chat rooms you may have been in before where everybody's got a chip on their shoulder, they're mad, they're angry because they're not making any money, they've been lied to, swindled. Not in our room. People are happy because they know they are learning a valuable life skill. Many of them are already profitable consistently, and they're eager to help the new guy because it only takes them a couple minutes a day to get their goal for the day. So, I mean, think about this. The business of trading. Not only is it an opportunity to earn an above average income, but it gives you time and freedom to pursue your passions, to pursue the purpose that God created you for. I mean, we're a blessed people living in a blessed time. Ministry costs money. You know, historically, missionaries, they would go out into the missionary field, wherever that was for them, you know, maybe 3-4 months out of the year. Then they would have to come back home, you know, and for 6 or 8 months, go from church to church with their hat in their hand, or go to corporate offices, you know, and stand before non-believers and beg for money to build God's kingdom. I wish I could do that needle scratch across a record right now. Really? If God has a mission for you, He will make provision for you. If you've got to go and stand before a non-believer and ask them for money to fund your king's vision, man, there's something wrong with that picture. Ministry costs money. The money's got to come from somewhere. God has given us in this period in history access to the wealth of the world. Scripture says we'll have the access to the wealth of the wicked, but I didn't want to say that. I just want to say the wealth of the world. The wealth of the world is just right on the other side of your monitor. You know, literally, you stick your hand in there and pull out what you need for the day to support your business plan and your trading plan. Okay. The 24/20 blueprint is going to help you write your business plan and your trading plan. 9 out of 10 new traders fail because they don't have either one. They don't even know they need one. Oh, but they do. Okay. When you become a passport holder, you get the 24/20 blueprint. It's going to help you write your business plan. It's going to help you write your trading plan. It's going to walk you through the process of putting those 10 days in a row together in your demo account so that you can go live with one contract. And it'll walk you every step of the way. Okay. 9 out of 10 new traders fail because they don't have a teacher, someone to show them how to do the job. Imagine trying to become a brain surgeon reading a book or watching a video, or even a pilot, even an electrician or a plumber, anything. I realize you can learn to do some things by reading a book and watching videos. I fixed my coffee maker yesterday watching a YouTube video. Okay. But do I now consider myself a coffee pot repairman? No, not by any stretch. You need somebody to show you how to do the job if you want to trade for a living. That's why we provide a teacher 2 hours every trading day from 9:30 a.m. to 11:30 a.m. Eastern. And one of the broadcasts earlier this week, the topic was copying someone else's trades will not make you a trader. Your focus should be not on just copying their trades, but understanding why it was a trade, why they entered where they entered, why they took profit where they took profit, why their stop loss was where it was. How did they know to go long or go short? See, too many people get discouraged too early on when they're trying to learn how to trade because they can't keep up with Michael because he's been doing this for so long. He just flies from market to market, you know, and it's just instinctively that he puts on and takes off trades. If your mind is focused on trying to copy his every move, then you're not learning. You're getting frustrated because you can't keep up. And we don't expect you to keep up. Now, should you be trading along with him in your demo account? Absolutely. But where your focus should be is not on what he's doing, but why he's doing it. Oh, now you're getting the other side of the brain involved. You know, your left brain's frustrated, but your right brain is learning. And so pretty soon, you don't need to hear him call out whatever number he's going to get in at. You got the same chart in front of you. You got the same indicators in front of you. Get your focus off of what he's doing. Get it on why he's doing it. People always ask, how long will it take me to learn this? Well, that depends on you. If you stay focused on what he's doing, you'll never get there. You got to put in the work. You got to show up every day. You got to ask lots of questions. And you got to learn the why. Okay? That'll get you there pretty quick because it's a pretty simple strategy. and a pretty simple set of indicators. To become a lifetime member, go here, eminifuturestrading.com. Couple mouse clicks, lifetime member. No fine print. Lifetime with us means that, lifetime, okay? No recurring fees of any kind, no upsells of any kind, no nonsense, period. You'll have access to the live training room every day, unlimited one-on-one mentoring, the strategy, the indicators, the alerts, the Thursday night members only workshops. This is your all access pass to everything we do, everything we've ever done, and anything we do in the future. If you have questions, call Valerie at 949-42-EMINI or send an email to support@cfrn.net. Time to wrap this up with our good word for the day. For the last 2 days, we talked about change your thinking, change your trading, change your life. We're on a roll, so let's stay with it. Proverbs 1:5. Let those with understanding receive guidance. Proverbs 1:5. The book of Proverbs begins. These are the Proverbs of Solomon. Their purpose is to teach people wisdom, to help them understand the insights of the wise, to teach people to live disciplined and successful lives, to help them do what is right, just, and fair. These proverbs will give insight to the simple, knowledge, and discernment to the young. Let the wise listen to these proverbs and become even wiser. Let those with understanding receive guidance. That's Proverbs 1, verses 1 through 5. Creative thinking is simply disciplined thinking. I think you know, if you think you know all there is to know, then you already know everything you're ever going to know. My mother-in-law had a saying that it honestly took me a long time to understand. And that saying was, the more I learn, the less I know. That was a real head scratcher for me. And then one day, I understood it. Scripture's that way. Sometimes you read a scripture and you just don't get it. Or maybe you do get something, but then, a week later, a month later, 10 years later, you read the scripture again, and another truth comes out of it. Man, that puzzled me. The more I learn, the less I know. Again, if you think you know all there is to know, then you already know everything you're ever going to know. In order to break out of the box, you must begin by asking the right questions. You'll never get the right answer by asking the wrong question. British screenwriter Sir Anthony J. said the uncreative mind can spot wrong answers, but it takes a creative mind to spot wrong questions. Wrong questions halt the process of creative thinking. They send you down the same old path. In order to change your life, you must change your thinking. That means you must be willing to ask these two questions. Why must it always be done this way? And is there a better way? Whether your goal is to build a better life, a better family, a better business, a better church, a better career, or a better anything, all change and progress must begin by honestly asking those two questions. The saying is true. If you build a better mousetrap, the world will beat a path to your door. So do you want to succeed? You must be willing to change your thinking in order to accomplish it. And that's our good word for the day and for the week. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with his mercy and with his grace. And I'll see you at the bell.